proactive brokers are the ones that succeed in this business. The ones that go out and do things as opposed to waiting in their office and waiting for the phone to ring. This is a proactive business. The people that do things get things done. And that involves doing deals just as much as it is how do you become an expert in that market.
Welcome, everybody, to the next show of the podcast. And I have such an amazing guest on here. He's done an unbelievable job online. And I enjoy his content so much. And I wanted to invite him on here to share his wealth and knowledge. But this guy is not only does a fantastic job online, this guy has an unbelievable history and experience. You know, this guy's been a broker since 2005, an investor since 2014. He's completed over 500 transactions in his career, and he's ranged from, doing deals from small-time companies to institutional buyers. This guy also has his own real estate show. He's earned multiple designations. He's been on in national media. I mean, this guy is a powerhouse in every name of the word. Welcome to the show, my friend, Chad Griffiths.
Hey, Henry. Thanks so much for the kind introduction and glad to be here. Thanks so much for having me on.
Yeah, likewise, man. I appreciate you being on. And listen, for those of my audience who do not know who you are, which might be a small few, I just would like to have you kind of dive into a little bit about yourself, just so we can start it off from there.
Yeah, so I started as a broker, like you mentioned, in 2005. Actually been at the same company ever since. So started as just a junior agent and worked my way up to being a partner at the firm. And then in 2014, I started investing in my own portfolio. So I've got partners and obviously a lot of debt as well. But combined, we've got about 160,000 square foot industrial portfolio and hopefully continuing to grow it. Although interest rates aren't anybody's friend right now, as maybe we'll talk about later. But yeah, it's been an awesome ride. Focused just on industrial real estate. And about 2-3 years ago, I started a YouTube channel and podcast just to share some of the things that I've learned along the way and continue to learn, because I'm sure very much like you as well, this is a business where you can't stand still. You're always having to learn new things. So share my experiences, share the things that I'm following, and really just try to create and foster an environment where anyone that wants to learn more about industrial real estate can come.
I love that. And listen, you definitely have one of the best channels just focused on industrial. So I got to ask the question of the big elephant in the room here. I'm just curious, why did you decide to focus on industrial real estate?
It was purely by accident, actually. So I got into the business in 2005, as I mentioned. And before that, in 2004, I actually started in the residential industry. So I was a residential agent for a year, and I really just didn't like it, didn't see a long-term outlook for it personally. So I started looking to get into commercial, and I thought I'd be working in offices or retail, kind of like that sexy idea of commercial real estate. I knew very little, if anything, about industrial real estate, but the office that I joined, that I'm sitting in right now, and coincidentally, I actually own this building too. Everybody here was focused on industrial. So just from the standpoint of if that's what you want to be exposed to, and if that's who you want to mentor under, and if that's where the expertise of the office is, purely by accident, I got into industrial, and it couldn't have been a better accident. Kind of like Bob Ross, like a happy little accident. That's kind of what it was, because without that, I would never have gone down this road. And it truly has become something that I'm passionate to talk about. I do it as a living. I have the majority of my net worth directly invested in it. That's all because of that one accident back in 2005.
So one thing that I wanted to talk to you about, which I feel like would be kind of fascinating to kind of debate this topic together, as somebody who I believe, at least from what it sounds like, and correct me if I'm wrong, but as someone who's basically spent very large percentage of their career so focused on one asset class, when I personally focus on several different asset classes, I want to have the debate here, and I kind of have the pros and cons of focusing on one specific asset class versus diversifying and across several different asset classes. So I'd love to just get your take. Like, why have you focused? Maybe just I understand how it kind of came to be, but like, why do you continue to focus on one asset class? Or even if you do, I'm curious. But at least just from what I can see.
Yeah, I would say that there's not necessarily a right or a wrong way. So happy to debate on why I chose to do it, but I also don't take a strong position that's what everybody should do. It's just what's worked well for me. So the reason that it's worked well for me is that instead of going a mile wide, you can go a mile deep. That's the cliche, I suppose, that if you focus on that one specific area, you can just become an expert in it that other people would have a hard time competing with. And an example I might give is there are generalists in my own market who try to do industrial and they try to do office and they try to sell houses, and they probably do a good job of all of it. I have no doubt that they're personable. They probably have great work ethic. They probably do everything that they can. But that generalist would have a very hard time competing with me on the depth of knowledge that I have, because I can devote all of my attention just to industrial real estate. So I can keep my finger on the pulse of what tenants are in the market, what landlords are looking to do to be active, what new developments are coming up, what deals just got done, what sales are happening. And it'd be virtually impossible for a generalist to keep up on all those asset classes to that level of knowledge. Again, that's not to say that it's the right way, because if industrial slows down, if we go through a big slowdown, I might have a very slow year. Or if something happens in the industrial space, office would be a good example, actually. Anybody that focused exclusively on office has had a couple of tough years as office space has just been in state of turmoil. So that's an example of if someone did specialize in office, it could have been a tough few years. Whereas if they did a little bit of everything, they could have weathered that storm a bit better. So I don't necessarily think that one is better than the other. For me, though, I like the idea of having that market knowledge that's, I'd say, unrivaled, even though there's people in my market that know just as well as me, but they're competitors. Unrivaled in the sense that if a client is looking to learn more about the market, or a developer just wants information on the market, I just have information that's not readily available. You can't just find this information online. It really is just a business where you need to be in the trenches doing this all the time. So I think that that's one of the biggest skills and bodies of knowledge that I offer to people, to clients, wherever it is that knowledge base. I'd love to hear your thoughts on this too. And again, I'm not staunchly rooted in this as saying that this is what everybody should do. It just worked well for me, but I'd love to hear your thoughts on it too.
There is no doubt at all. And I'm fully supportive of your mentality of going deep, right? And becoming an expert in a specific asset class. I think that, like you had mentioned, I love the mentality of having an unrivaled experience and expertise in something. I think that's incredibly important. What I've shifted personally, what I feel like has worked well for me, is having the expertise in strictly investment real estate, where I'm looking for more specific of how do I create returns in this piece of property, where my expertise lies in structuring deals that allow me with, my expertise, is more so pre-existing value add real estate, right? Where we take an existing building, majority of the time is either industrial, retail, or multifamily, and taking that from what it is today to a much more valuable asset. So it allows me to focus my expertise in just increasing value, or structuring deals where I can increase value to get to a return basis that makes sense for my investors versus a specific asset class. So I think that I like the mentality of just shifting from expertise to an asset class to expertise to investments in general. At least that's how I've looked at it, right? Like my deep rooted experiences in that versus an asset class specific, right? Because and I'm sure you've seen it too. Like, you've had some friends in the office space which are definitely hurting right now. And if you focus on one asset class and that mentality, you might have a really tough time.
I like the idea of being diversified from an ownership standpoint for the same reason that it'd be irresponsible if you're a stock investor to go and buy only utility companies, right? To have a proper allocated portfolio, then you need to have banks and energy and telecoms. Like, you need to have broad exposure. So I like that idea as well. Even I'm over leveraged heavily in industrial, and any advisor that would look at my portfolio would say that I'm absolutely ridiculous to have so much weight in this one portfolio of industrial. So I'm not opposed to that line of thinking whatsoever. In fact, I would think that from an investment standpoint, that's actually prudent. And I would say that that's your expertise. You're still an expert in that space. You're not trying to sell cars on the side and trying to be a mutual fund salesman. Like, your expertise is in value add investment properties, and that is an expertise in itself. So I think you and I are on the same page, just perhaps in a little bit different lanes on the highway.
And I'm always curious to get people's opinions on how they've structured. So I'm curious for the listeners here, a large portion of my audience are individuals who are either brand new to the commercial real estate world, as I'm sure some of your audiences as well. And then I have a few individuals that are, already doing fairly well in the commercial world and want to enhance their abilities, right? So I'm curious to see, like, from your standpoint, what do you feel like has allowed you to scale to the ability, like, listen, doing 500 transactions in your career is no small feat. Some of these people are coming to our channels doing maybe two, maybe two or three or four, or maybe zero. So I'm curious, like, if you were to rewind the clocks and go back to the very beginning of your career, what advice would you give yourself starting out as a brand new agent going into this industry?
Great question. And I think looking back on it, I'm pretty comfortable with how the trajectory of my career has gone. But if I could go back, what I would say is to double down on the things that were productive and stay away from the things that were unproductive. And it's very difficult to know that looking forward, but it's very easy to see that looking in the rearview mirror. What I would specifically do, if I could go back to day one, two things I would focus on right off the bat. Have to become an expert in your market. So you just need to know all those things that I mentioned. What deals are happening, who the big players are, everything to know about that market. You just need to be an expert. Then you need to find and connect with as many people as you possibly can and share with them that information. So that if I could go back, that's exactly what I'd do. I'd spend a certain amount of my time, not necessarily business hours or working hours, but on the weekend, driving through an industrial park or reading a research report, anything I could get my hands on. I would just want to become that de facto expert in my market and know everything that I can. And then if you combine that with an outbound prospecting mentality, where whether you're cold calling or door knocking or social media prospecting, whatever it is, whatever vehicle you have to get in front of more people, you share that knowledge with them. And if you do that over a long enough period of time, you quickly become known as a resourceful broker. And people want to do deals with resourceful brokers, especially if you can combine some other skills that you've got the ability to communicate and you follow up and you work hard and you have everything that you'd expect from a broker. That's like the bare minimum standard. But if you combine that with being an expert and just telling as many people as you can, sing it from the rooftops, try to connect with as many decision makers and deal makers and referral partners, that's a path to success. I don't care what line of real estate someone gets into. If they do those two things, and I did, I got distracted by other things over in my career as well, which that's where I would say I'd keep roughly the same trajectory. I just want to double down on those activities because that in my mind is the most beneficial thing a new broker or an existing or an experienced broker can do. Become an expert and sing it on the rooftops.
Let's dive into both those things because I think we're very similar in that retrospect, right? A lot of what I talk about is prospecting, right? I make a lot of cold calls every day. I love it. I enjoy it. I've built my, my teams, and my own personal production has been based off of it. I want to talk deep on both of these topics. So let's focus first on the prospecting side, and I'd love to get your thoughts based on like what avenue that you feel like someone should go in this market right now, because obviously, with interest rates the way they are, which we'll talk about in a little bit. But I'm curious, like, let's just specifically talk about the outbound, getting, bringing the leads into the ecosystem. How would you go about doing that today, or how do you go about doing it today? And what would you do differently if you're going back to day one?
Yeah, I think I always equate it to like a football game. If you're going to play a football game, you want to have 12 players on the field. You don't want to have 3 players on the field. You want to have everybody on the field. And from a metaphorical standpoint, you can't just cold call. You can't just door knock. You can't just rely on social media. You can't just rely on sign calls. You need to do all of those. You can't just win a game with one player. You can't win in the business of real estate with doing one of those things. So I think it is some mix. And there's people that will gravitate to doing one more than the other. And I think that's fine. But you can't rely on just one. Cold calling's an easy one. I think that anybody starting in this business, they need to be spending several hours a week cold calling. There is a limit. I think everybody will hit a limit. You might be able to do 40 hours a week of cold calling, but you might only be able to do that for 2 months before you burn out and hate the job. So I think that there is some element of balance there that you just need to make outbound prospecting. Yeah. Cold calling's a no-brainer. I've done that my entire career. Door knocking's another easy one. One thing that I'd say, if anyone is just interested in a quick tip on this, take a brochure and just walk into every business in the area and say, hey, I've got a property just down the street from you that's for sale or for lease or whatever it is. I just wanted to know if you guys have any real estate plans in the near future. And if you don't have a property brochure, you don't have a property listing, you're new into the business, ask another agent in your office if you can prospect on their behalf. And they would be crazy not to have another agent go out and hand drop off brochures in the area. And if for whatever reason they didn't agree, find another agent because that agent is useless. But take a brochure, walk into every business, that same line. Got a property listed down the street. Just want to know if you guys have any real estate plans in the future, if you want to know more about it. Just a very quick lead in. Every company that leases or owns space, they've got a line item for real estate. It's a big consideration that they take into account. Any company that's not at least thinking about what's happening in their property down the street is probably not going to be around for very long. Most companies will be amenable to that opening, but you're going in there with some value. You're going in there with market information so that they can have that information to perhaps inform their next decision or just to give them some market information in general. You're going in there with value as opposed to just walking in and asking if the manager's in. So that I built my career prospecting largely on that method, and I still instruct new brokers that join our office or that ask for my advice. That's the number one thing that I say. It's the easiest thing to do. People aren't generally going to be as rude to you in person as they could be on the phone. And if they are, you just leave the brochure and walk out and go into the next one. But that to me is an absolute no-brainer on what new agents should be doing. And then I think that there's also the social media platform too, where this is where I found a lot of people also get this one wrong, is they think that they can just post pictures of them fly fishing or going on holidays, and they think that this is going to drive a lot of business in. And from my experience, it won't. But if you actually do treat social media the same way that you treat prospecting, then you start sending direct messages to people, or you start sending them, leaving a comment on their post. You actually start treating it as a proactive approach to trying to get business, as opposed to just thinking posting pictures or tweets about yourself is going to drive traffic in. So it really is that outbound mentality. You have to just make a lot of outbound efforts, cold calling, door knocking, social media before you start getting inbound activity in.
I couldn't say it better myself, my friend. I think it's super crucial, and I love that you're mentioning both the cold calling and the door knocking, because I think that it's like everyone's trying to get away from what has worked for 20 to 30 or 40 years to try to find something that's easier, when in reality, it's incredibly simplistic of just either making a phone call or seeing somebody face to face. And it's like, just by posting a bunch of advertisements online is not going to drive the right traffic or enough traffic, similar to what you said. I think it's a both and, not just, focus on just doing Facebook ads or one of these advertisements that everyone gets so caught up in. So I like that you're saying that. And I agree with you on the social media front, which again, you're doing a fantastic job of really focusing on one niche and educating the world on it. And you again becoming the person in the area, the go-to person in your area, the expert to go to. And I think you've done a fantastic job on that. So speaking of that, I'm curious, let's flip to the other side. It's okay, what information are you reading? When you're speaking to a newer agent or even a seasoned agent who maybe just doesn't know the right places to find reports, are you just talking about going to, again, in the States we have CoStar, I'm pretty sure you have that as well. What other reports are you, what reports are you looking at? What should somebody be reading about, and where would they find it?
Yeah, I think one dangerous thing that agents do is that they only want to read information that has either been created by their own brokerage or doesn't have any overlap. I take the opposite approach. I read every report that I can. So I'll read CB's reports. I'll read their reports on global industrial trends. This morning I read a Marcus and Millichap report. I'll read Collier's reports, Cushman Wakefield reports. I read their local port reports that they put out specific to my market. And I also read the ones that are of interest to me from a North America-wide or global perspective. And every brokerage has this information. They put it out for free. So that's a natural one. I actually read more now than when I did when I first started. I consume a ton of information right now. So brokerage ones are a no-brainer. There are a lot of appraisal firms, same thing. They'll put out local information. Sometimes it might be a boutique shop that just reports information on that market specifically, or it could be a larger firm. And then there's also a lot of great publications out there. So globestreet.com is a great one. biznow.com is a great one. Prologis, largest industrial real estate owner in the world, they put out a ton of awesome content because they're so large. I think of them as a bellwether for the industry. They put out a ton of free information. There's some organizations. I belong to NAIOP. I read pretty much everything that comes out from NAIOP. Some other industry specific ones like SAOR and CCIM, same thing. They put out a lot of great information as well. So I would say if someone's ambitious and they're not just looking for things to hit their mailbox that they find interesting, but actually, again, that proactive approach, I truly do believe that the proactive brokers are the ones that succeed in this business, the ones that go out and do things as opposed to waiting in their office and waiting for the phone to ring. This is a proactive business. The people that do things get things done. And that involves doing deals just as much as it is how do you become an expert in that market. So it's out there. It actually becomes a problem of how do you sift through enough of it, because it's an overwhelming amount of information once you start uncovering all these different sources. How do you sift through it all and filter out it so that you don't spend your whole day reading articles, but instead get the gist of it? That's what the problem becomes once you really start going down the rabbit hole. But there's a ton of sources. There's no shortage of great content out there. But again, it doesn't just get served to you on a platter in your email every morning. It requires going out and doing some work.
Yeah, so I think you mentioned an unbelievable amount of great sources that anyone should be definitely doubling down on time-wise, like you had mentioned before, and really become the market expert. And by the way, again, this works for every asset class. So whatever you're focused on, for anyone who's watching, whatever asset class you're focused on, every single one of the different sources he had mentioned are fantastic resources, not just industrial, but just in general, great, fantastic resources. So I appreciate that. So let's dive into the interest rate questions. Okay. I'm curious to get your thoughts on today's market. And again, you're based out of Western Canada. So I'm curious to understand where you feel like your market's at right now, and where do you think we're headed, and how has interest rates affected your business?
Even though I'm based in Western Canada, I know a lot of my audience is in the US, and I'm guessing a lot of your audience in the US as well. We move pretty much in lockstep with the US. If anything, whatever happens in the US, we see it happening a month after. So we lockstep with what happens in the US. And I follow a lot of US markets quite as well. So I'll perhaps speak even more generally instead of just narrowing it on my market.
Sure.
I don't think that the interest rates have come even close to being priced into the real estate market yet. And I say this is where I've got the majority of my net worth directly invested in real estate. So I could be biased and say that everything's fine and try to protect that whatever value is in my real estate portfolio. I think it's the opposite. I think that the market is under so much more pressure than anybody fully appreciates. And anybody that is selling right now is selling into a very depressed market. And that goes across the board. That goes to a brand new industrial building that's leased to Amazon as much as it goes to the small machine shop that's leased to that's owned by a small mom and pop owner. Everything on either end and everything in between, because it's simple from the standpoint that interest rates have gone up so fast, record pace, highest they've gone up in several decades anyways. Fastest, I should say, not the highest. Fastest they've gone up in several decades. And the market hasn't had time to fully factor those in because a lot of debt is fixed. There's some debt, even on the residential side, there's 30-year mortgages. But even on the commercial side, it could be a 5-year mortgage that a lot of the owners have. They're not concerned about it right now because they're probably sitting on a 3% mortgage. It's going to be what happens when all these mortgages come up for maturity. And I'm looking at this right now. I've got this building that I'm in right now. Actually, this building comes up for renewal next year. And I'm anticipating that we're going to see a 250, 300 basis point increase in our interest rates. That's going to crush our cash flow. That is a problem that hasn't been fully factored in yet. I would guess, though, and just a broad speculation, that the real estate market as a whole should be down 15 to 20% right now. And I think that will be a blip. I think any real estate investor that has a long-term horizon will look back on this as just that a lull in the overall trajectory. At least I hope. That's kind of my working thesis. I could be wrong. You might have to ask me in 5 years. But I do think that this will resolve itself. But right now, anybody that's selling, that has to sell a property, they're selling into a heavily depressed market. And the reason it hasn't shown up yet, and maybe it blows over, I have no idea. My crystal ball is as murky as anyone's. But the reason it hasn't manifested itself right now is that a lot of owners still have those cheap interest rates if they're locked into a 5-year mortgage or longer. And the lease market is still healthy. So there's still a lot of companies that are looking to lease space. We still have historically low vacancy rates in most markets. So if a owner still has tenants, they're not losing money on their cash flow. They're not losing tenants. Perhaps they even have a fixed mortgage. They're not affected by this. So we're going to see a lot less sale volume, a lot less deal volume. I mean, you're in the investment space. You know this way better than me. It's tough to get a deal done right now because sellers still want 2021 pricing and buyers are saying it's not 2021 pricing anymore. So that delta between that bid ask is at an all-time high for what I'm seeing. So interest rates are problematic, and until we get some relief on that, or just the economy as a whole has time to digest it and adapt, I think we're just going to see a huge drop in deal volume.
I agree with you 100%. I think that I don't think we're even close to done with the increases. I think the economy, I think the economists today, or the Fed specifically, has got a few more hikes in them. At least I think we'll start seeing that until the next presidency, and maybe a little bit through that. So I think into 2024, hopefully we'll start to see some type of plateauing, I'm hoping. At some point, we're noticing a lot more of our deals are being structured very creatively these days. Like the only way that we're getting deals done is through creative financing, or at least a large majority. I think that, like you had mentioned, I'm in full agreement that we definitely should have already seen some type of blip, or at least movement in average pricing, which overall I think that there probably has been. We just haven't noticed it so much because there's been such a drop off in sales. And I think that we'll start to see a lot more of that as the next 12 to 24 months runs through with people's interest rates. Again, they have a few $1 trillion worth of debt, which you have been alluding to, saying that, like a lot of the debt's coming due. And I think that is going to also open up a lot of opportunity. So I think that could also breed a lot of opportunity for the right type of investor mindset agents and buyers in the next coming years. And I think that that could create a lot of opportunity for us. So speaking of investors, I'm curious, as someone who's been an investor for almost a decade now, which is awesome, and built up quite the portfolio. How has being an investor and having an investor mindset as a broker helped you grow your business?
I think that there's a lot of overlap for both, from wearing the hat as an investor and a hat as a broker. And perhaps the biggest one is that you just need a long-term mindset. It's very difficult to be successful as a real estate investor if it's a flipping mentality. And I don't want to denigrate any quick flipper, because there are people that do it. It's just, in my experience, that comes with a lot of risk as well, and it's difficult to do. So I personally have a very long-term outlook. Like I with my investment portfolio, I'm thinking 20 years right now. I'm thinking that I could even go beyond that, and my children take that portfolio over at some point. And I think having that mentality is also helpful with brokerage, where a lot of the time we tend to just focus on what's on our desk. And that's where our focus goes, so you're working in your business, but there also needs to be that proverbial working on your business. And that usually requires a much more longer term horizon. So someone that might want to start a website and start putting articles out there, that could be several years before they actually get traction on that and start getting a deal from it. And that's hard for brokers to do. And I've found that that's hard for investors to do as well, especially when you look at the stock market, where you can get live time updates of what that stock is worth during trading hours, and you know exactly what it is. In real estate, you really don't know. You're sort of sticking your finger up in the air, a wet finger in the air, and seeing which way the wind blows. And it's a guess for the most part until you actively take a property to market. So I think that long-term outlook is very important. And that's what I would say to brokers and investors, is that you need to take care of business. That's important. You need to obviously do the things that are on your desk, but you need to carve out some time and also have that mentality that if you're planning on doing this for the long term, you also don't want to get too much in the weeds on what's happening on a day-to-day basis, but to put that hat on of thinking long term. So that'd probably be the biggest one. And it also ties back into the expertise angle. And that's why I think investing in real estate is really important for brokers, is that if you develop an expertise in that space, you have insider information. Essentially, it's legal insider information. It's not acting on a stock tip from your uncle that works as a CFO of the company, but you have insider information, the fact that you know things about the market that the average member of the public doesn't know. So that's an edge. And I think anytime you can have asymmetrical information, that's where you could produce a return that outperforms, call it an index or an S&P index. I think that it goes hand in hand. If you become an expert in brokerage, that information becomes insanely valuable if you want to start converting that knowledge into actually the investment space.
As an investor and having that mindset, especially in my world, less because more so what I'm trying to do is I'm stepping in the shoes as an investor before I even think like a real estate agent in every deal. Because we're looking to acquire properties essentially is our focused mindset to begin with, and then restructuring them as deals to sell to investors, right? So I think that it has given me, and like you're even alluding to before, it gives us an edge, having this type of mindset going into a deal and saying like, hey, like I know this will be a great opportunity for the next buyer, or someone that you're working with, like, being able to sell them like, hey, like I know that all these developments are going up. I know that all this, is happening within the next X amount of years. Like, what's about to happen in this marketplace better than the next, and being able to bring these opportunities to the next buyer, that institutional buyer, that investor who's looking for a deal, I think really puts you above everyone else. So I like that you were mentioning that. So I'm curious in regards to the space of YouTube, right? Because you've done an unbelievable job online and you continue to do so. I'm curious, number one, why'd you get started? And I'm curious to understand, like, what's your vision for the next 5 or 10 years with social?
Yeah, great question. So I started in August of 2020, which if we can all go back to that summer, that was a pretty crazy, wild year, right? So there was a period, I think it was announced in like March, right? Middle of March is when they shut down the NBA and then the NHL right after. That period, there was a month where there was no activity, like nothing was happening. Everyone had no idea what to do. So everyone was just sitting on their hands. And as a broker, as an investor, I had nothing to do. So I was just really bored. So I said to my wife, I can't just sit around. I'm not one of those guys who can just sit around on a beach. And like, I get really stir crazy even on holidays for this reason. So when I had a whole month, yeah, well, you're in Miami now, you might have to enjoy a little bit more of it. So I had a whole bunch of spare time, and I've taught commercial real estate for our board for a number of years. And my dad was a teacher, so I think I've got a little bit into that in my DNA. I just thought it could be a good opportunity to share things that I've experienced along the way, successes, failures, everything in between. And I thought YouTube would just be an interesting way to do it because there's very little content out there actually specifically for industrial real estate. So I started doing that and then quickly added a podcast on just to talk to people that I knew in the industry. And it's just, yeah, it's growing at a good pace right now. And one thing that I always like to say about it is that my whole purpose of this channel is to try to add value to the community. So much so that I don't mention what company I work for. I don't even mention what city I live in. I've done over 300 videos, and the only time that I've ever even said where it is if somebody specifically asked me. Like even when you asked, Western Canada, that's about as specific as I'm even going to get, because I don't want people thinking that I'm doing this for promotional purposes, other than the fact that I've had a really good career and I'm in a pretty good spot where I am. So I want to grow a community around it, and it's a very niche industry. So I'm never going to be Mr. Beast. But I like the idea of having chats like this, like the amount of conversations that I've had with great guys like you and other people all around the world. And I've been invited to speak at numerous conferences, and I've done a number of webinars at universities and organizations. That opportunity has only come because I put myself out there on YouTube. So it's been a very cool platform. It's been a very fun, I guess, 3 years now, actually, now that we're in September 2023, 3 years that I've been doing it. It's been a ton of fun. I've met a great number of people literally all over the world. I've talked to people in China and Australia and Lebanon and you name it. I've talked to somebody there, and now I think that I've got connections with all these people. So in terms of where I think it goes, the best way I can answer it is that quote from the Batman movie where the Joker's talking about, he says the quote, he's like, I'm like a dog chasing a car. I don't even know what I'd do if I caught the car. I think that like sums up my whole perspective on this as well. I don't know. I'm just having fun with it right now, and where it goes, I don't know. You'll have to ask me down the road, and I'll tell you if I have an answer.
I mean, look, again, you've done a great job, and obviously we'll have all of your content or contact information in regards to your channels and social media platforms down below for people to check it out, because I think you do such a fantastic job. And yeah, I think that it's interesting how like nowadays with things as simple as a cell phone, not let alone social media, the world has become so small, and we have the ability to create such amazing communities with ease. It seems like we're within a few short months or years, you can create something quite special and like you have. And I think that's important for people to take advantage of the fact that it's free. And if you take the time to do so, you can create a community of people who are all moving towards the same mission. So it's amazing the work that you're doing. And I'm curious to ask you a few questions here to wrap things up. In regards to your current position at your brokerage, you said you're the broker at your office, or how's that set up?
I guess I use broker and agent interchangeably. So no, I'm not the broker, but I'm a partner at the firm.
Okay, so I was just saying you're the owner of the firm. I was just, well, the reason why I'm asking is specifically, like, I'm curious if you have any goals you'd like to share, because obviously we have people all over the world who watch my content. I'd love to be able to support you on whatever vision and goals you have. So what kind of goals do you have for the brokerage?
We are still in growth mode as a brokerage. So we've been lucky. We've brought on some really good brokers in the last 2 or 3 years. So the firm's growing. I think top line revenue will be a little bit wavy over the next year or two, which is across the board. Like, I don't think that there's a brokerage company out there right now that feels confident that they're going to keep growing top line revenue. But that's the long-term goal. I'd love to add another division. I think property management or appraisal or lending can integrate quite neatly with the brokerage side of the business. So that'd be something of interest to explore down the road, and perhaps even expand into another market. That could be of something of interest as well.
Yeah, so we'll be sure to at least have anybody who's in I guess the Western Canada, because that's as close as we're going to get to that location wise. Anybody in the Western Canada area, will have them reach out to you.
If I didn't have such a noticeable Canadian accent, I wouldn't even say Canada. I would say North America. but my Canadian accent gives it away, so I usually have to narrow it in a little bit more than that.
I love that. I love it. Cool. Awesome. And again, like, just want to, be able to support that. And last few questions here. So I'm curious if you were, and I asked this to everybody, I'm curious if you were to restart your entire career, because I know we mentioned a couple key points, what would you, like, going back to day one, knowing everything you know now, you had to go back to day one again, completely brand new area. I picked you up and put you in a completely different area. I put you in Miami, Florida, or wherever. But I'm curious, what would be like maybe your first 3 steps, your first 3 moves? Patrick Bet-David and I'm a huge fan of Patrick's, and he has a book called The Next 5 Moves. So I'm curious, like, what would be your next 3 or next 5 moves that you'd make if you were to restart?
So first thing I'd do right off the bat is I'd try to get as many warm contacts as I could. So no matter where it was, if I was moving to Miami right now, I will know somebody in Miami, or I'll know somebody that knows somebody in Miami. And that'd be the first thing that I would do before I even found a place to live. I'd be setting up those conversations well in advance, just saying, hey, I'm coming into your market. I'd love to meet, just trying to get myself acquainted with the city, and I'd love to have a few people to connect with. I'd do that right off the bat. And I think that is applicable even if you're starting in the city that you already know versus moving to a new city. Because if you're starting in the business, you probably haven't reached out to your uncle that owns an HVAC company, or your neighbor who owns a small commercial property. You probably haven't had those business conversations. So it'd be the same thing, warm intros. So if you're talking to someone, hey, do you know anyone that owns any property that you could introduce me to? I don't want to sell them. I just want to meet them, ask them some questions. I'm new to the business. Do you know anyone that owns a business? I'd be doing the exact same thing if I moved to another city. Then mission step number 2, I got to become an expert in that market. I just have to know everything about that market. So that's where at the beginning, I'd be allocating a lot of my time to just understanding what buildings are available, what buildings just sold, what are the market comps. Those are the same things we already talked about. I would just want to become an expert in that market. And then one thing as well that I would do, and probably the one thing that I really wish I would have done more when I was younger, was to save more money. And I know that that's tough, especially if someone's coming out of business school and they've got loans and they're perhaps not making as much money. But I know that when I started, I spent money on stupid stuff that I did not need to spend money on. I had a new car I did not need a new car. I actually had the car that I drove when I started was worth more than the car that I drive now, because for me it's not as important as I'd like to invest in stuff. So I wish I would have saved more money and avoided making some of those stupid purchases, because that power of compounding that money, and because I didn't start until 2014 investing. And the reason that I started in the business in '05 and waited to 2014 is it just took me that much time to save up enough money to start investing. I was raising a family, you're trying to buy a house, putting your kids through school and sports. It's just expensive. But there is enough money that I squandered early in my career on completely unnecessary things, that if I was more responsible with even half of those things, I might have been able to buy a property 2 or 3 years early. And I think that would have changed the trajectory of where my portfolio could have got to. But it's pointless to look at things like that in retrospect, because I can't change it. But if I did, and what I try to instill in my kids, and I still do, even though they're young, is saving money, especially when you're young, is so powerful. So those would be the three things that I do right off the bat.
Great pointers. So I've come up with this question, and I'm curious to ask a bunch of people this, and especially like yourself, who's built the portfolio you have. What type of investments do you look for? Like when you're talking about investment properties, you're like, this is exactly what I want to buy right now. Like what are you specifically looking for? I'm curious to get your thoughts.
I'm a big analogy guy, as you could probably tell with all the analogies that I use. I like to hit singles and doubles, using the baseball analogy. I don't need to hit a home run. I don't even need to swing that I'm trying to hit a home run. I want to find good, stable investments where my downside risk is mitigated. I'm not exposed to something that I'm not comfortable with. Kind of the Warren Buffett mentality, right? Is rule number one, never lose money. Rule number two, see rule number one. I'm much more a cautious investor. And another quick analogy, and I don't want to go too far down this rabbit hole, but I've equated investing like a pendulum. If you're prepared to take a 10% risk on a property, you should be able to have a 10% return. And it goes both ways. If you're expecting a 20% return, there's probably a higher amount of risk on the backside. Is it 20% exactly? Probably not, but it's good. A 20% investment is generally going to have a higher risk than a 10% projected return. What I find really crazy, like the absurdity of investing, is when an investor is prepared to take a 50% risk, but they only are expecting a 10 or 20% upside. That to me is absolutely insane. If you're going to take a 50% risk, there should be at least a 50% upside. And I'm not there. I'm that 10%. I can take a 10% risk on the pendulum on the downside, and I'd like to see a 10% or arbitrary. I mean, if you start getting into IRRs and cash on cash, my numbers would be a little bit higher than that, but just loose numbers, 10% downside, 10% upside. I want to hit singles and doubles. I want to stay in the game as long as I can. And those singles and doubles drive in runs if you're in the game long enough. So that's my mentality, using a couple really cliched analogies.
So again, just to kind of do one step further into this, and then we can wrap up for today. So like in regards to like the portfolio that you have, right? Like, I mean, are these like single tenant, large industrial buildings that you're looking to have, or do you do like flex space with multi-tenant? Like, what do you like? I'm just curious, like, to really understand that. We don't have to dive into cash and all that kind of stuff, but
Great point.
I'm curious to understand that piece.
So my favorite would probably be flex industrial, and this building is a good example. Sun's actually shining right in my face right now. Sorry if that's a bad shadow. This building. So our office is in this building. Myself and three partners own this building, and it's an industrial building on a main road. This space, our company leases it off of our holding company, but there's a hot tub store in here. There's an equestrian store. We have a flower shop in here. We have a hot tub distributor. It's an industrial building that almost has a retail or like a suburban office feel to it. I love these types of buildings because they're so versatile. You put so many different types of tenants in here. We could put an industrial tenant in here because it's zoned industrial as well. It's a very flexible zoning. That's why we have some quasi retail tenants in here. Yeah. But I've got so this is a multi-tenant flex building. I've got a couple manufacturing buildings, freestanding single tenant manufacturing properties, which are interesting as well because you have a lot of risk tied to one single tenant. And the ones that we bought, we've had a considerable amount of term on the lease. So we're kicking the can down the road in terms of that tenant coming up for renewal. But that's the upper echelon of how much risk I'm prepared to take on. And then I've got a few other multi-tenant industrial buildings, which are either light manufacturing, light industrial, or called like quasi flex like this. But this is my favorite building in my portfolio from a personal standpoint, just because I work out of it, and it's pretty cool going up to a building that you own. When I started at this brokerage, actually it's 18 years now I've been in this. So 18 years ago, I started as a commercial broker that didn't even know what industrial real estate was. And then to fast forward and I get to pull up and say that I own the brokerage and I own the building. Kind of a cool feeling.
Well, kudos to your success, my friend. You're doing an amazing job in every
Appreciate that, man.
life. It's amazing. So where can my audience find you, man? How can we follow the journey?
Yeah, YouTube's awesome. So an awesome place to go, because that's probably where I'm most active in terms of creating content. So the handle is just at Industrialize. And then I'm active on Twitter as well, or X, I guess, as we're supposed to call it now. And that's just my name, at Chad Griffiths.
Awesome. Well, listen, thank you so much for being on and sharing your wisdom with my audience. We appreciate it very much. And hopefully we'll have you on again soon.
Yeah, it was an awesome conversation. Loved all the questions and the back and forth. So thanks once again for having me on, and just doing an awesome job as a host as well.
I appreciate that, man. Well, thank you so much. And everyone who's watching, again, check out Chad's stuff. He's doing a fantastic job, and we'll see you guys in the next podcast. Take care, everyone.